True cost of a loan. Remember, you're not taught to think this way, so they can make more money from your mistakes. A mortgage doesn't really fall into this category, as you have to live somewhere. And when you sell your home, you'll get to keep all of the equity value in your home. So a mortgage is more like a forced savings account. For this lesson, I'm talking about short-term loans like car loans, credit card loans, personal line of credit, etc. You can download the true cost of a loan spreadsheet from this page. There is a link to the file on the second line of the description of this video. You can pause this video while downloading and opening the file. All downloadable files are free. They are Excel spreadsheets with the XLSX file extension. This type of file was chosen as it will not support macros, which means they can't collect any of your personal data. After downloading, move it out of your downloads folder onto your desktop. Later, you can move it to any folder as you like. Just don't keep it in your downloads folder. The first time you open the spreadsheet, you may have to click on Enable Editing so you can enter your data. And let's scroll it down to here. Maybe another. Okay. The true cost of a loan spreadsheet does a side-by-side comparison of borrowing for a purchase versus saving for a purchase. The spreadsheet has fields in it for you to enter your own values. For now, we'll use the defaults of $20,000 for a loan, like a car loan, for 4 years, 8% loan interest, and a 3% savings interest. 3% was available when this spreadsheet was made. The default values calculate a monthly payment of $488.26. Since that's what you pay for a loan, we'll use that same number for a payment to your own savings account. The table then shows running balance for a loan beside the running balance for a savings account. If you keep your current car for just one more year, the table shows that you'll have saved almost $6,000. That's $6,000 that you could add to your down payment for the next car. If your car needs a repair during that year, that's $6,000 available for that repair. You'll most likely still have something left over to add to your next car's down payment. At the end of 2 years, let's highlight that way. At the end of 2 years, your savings could have about $12,000. That's a real nice down payment, or it certainly buys a lot of repairs. In year 4, we see that the savings account now has more in it than the original loan. How can this be when savings interest is less than loan interest? Because your savings deposit includes what would have been loan interest. You'll be keeping the bank's loan interest for yourself and earning more interest on it. In 4 years, you'll be able to pay cash for your next car instead of borrowing. Your old car and a new car will both need regular maintenance, so you can't count those expenses. Yes, your old car may need some repairs, but by putting money into savings, you should have more than the repairs have cost. At the end of 4 years, the table shows that you could have an extra $4,867 because you didn't get the loan. That is a hidden cost of the loan. Your banker won't tell you about this loss because it's not directly associated with the loan. When you add that lost savings to all the interest paid for the loan, the total true cost of the loan is $8,867. That's a whopping 41% of the original loan value. But it really doesn't stop there. Going forward, year 5, year 6, that $4,800 could continue to grow. And at the end of 30 years, that's another $10,000 that you won't have because you got the loan today. I know that's not really worth thinking about at this point, but those first 4 years certainly are worth your time to review. So let's go back. Suppose you decide to get a new car after just 2 years. You could take that $12,000 saved and add it to the down payment. Now you only need an $8,000 loan. So up here, you can enter $8,000 for your loan. And we see that the payment then drops to $195 for 4 years. If we enter the same $488 payment and scroll down, we see that the $8,000 loan can be totally paid off in about 18 months. So let's see what a 2-year loan payment would be. You can scroll back up. We enter 2 years for a loan payment. Come down here and clear the alternate payment. And a loan payment would be $362, which is less than the original $488 a month. Even with the loan, you could still save $126 a month for the next car or for repairs. Another important cost that I see associated with any loan is the commitment to make those payments. You better make those payments or you'll lose the car to repossession. If that happens, you'll also lose your down payment money and all the payments that you've already made. With a savings account, you won't lose a penny in your account just because you missed a few payments, or even a lot of payments. With a savings account, you also have the option to decrease the amount of your payments because they're too large. With the savings account, you can take all the money, use it for a larger down payment, and get a smaller loan, Your smaller loan could have a smaller payment or a shorter term or both. Whatever you decide to do, I think you should keep cars for at least 2 years after the loan is paid. During those 2 years, continue making car payments to your own savings account. You're already used to making the payments. Just keep making them now to yourself instead of the bank. The goal is to save up enough to pay cash for your next car. By the way, the average new car loses almost 50% of its value in the first 3 years, making the first 3 years the most expensive years. The real sad thing is that many brand new cars still end up in the shop for repairs during those first 3 years. Sure, it's under warranty, but you've already paid for it with the doubled price. A brand new $40,000 car generally can be bought 3 years later for about $20,000. That's a $20,000 savings. Is it worth paying the extra $20,000 so those few repairs can be free under warranty? That $20,000 can pay for a lot of repairs. That $20,000 will most likely pay for more repairs than you'll ever need, which means you'll have money left over that can go to your next down payment. I stress repairs as even new cars need regular maintenance like oil changes, brakes, batteries, etc. Also, that new car smell is made up of all kinds of nasty chemicals that aren't really healthy for you, making used cars healthier for you and your bank account. One last note here, and please remember that I tend to think a little differently. In October 2011, I bought a used car, and I still have it more than 10 years later. The price of the car, plus all of its repairs, plus all of its maintenance, still hasn't totaled up to $20,000. Sure, it doesn't look all that great, but it's reliable. And I don't worry about door dings or accidents either. In the past, I've had new cars, and the bad feelings I had when something happened to it weren't worth having again, just so my car is shiny. I much prefer having a savings account grow and not worrying about door dings and having a shiny car. Remember, you're not taught to think this way, so they can make more money from your mistakes. Thanks for watching. I hope this video helps you to understand and take control of your finances. Please help me by hitting those like and subscribe buttons. Thanks. A link to the next lesson is in the description of this video.